Hey, Don.
I am on mute. Hey, Don, good to see you again.
Hey, Daniel. Yeah, same here. Yeah, I was going to mention that you're on mute, but figured you would have known that.
I figure that out usually pretty quickly, right after making the obligatory stupid, oh, I guess I'm on mute comment.
Yeah, no problem. Yeah, I was just
Glenn, how's it going?
Good. How you guys? Oops. Good. How you guys doing?
Good. Let's see. Let me pop over to our attendance and registration records. We have hopefully more people, because hopefully everyone brought a friend. We have 161 people registered, which has been fairly similar to our previous weeks.
It's a big group.
We'll probably get about 80, 50% of those people actually coming.
All right.
So, hey, Glenn, bring a friend. Oh.
I suppose you want somebody who can actually invest money.
Oh, well, I don't know if your dog feels like, she gets value out of this. What's your dog's name?
Chewy.
Chewy. I like it. He or she or?
Was a he.
Aha.
I don't know if he still would claim that or not, but let's go with yes.
Glenn, you're very you're a great guy.
I know that voice.
It's like so sad.
I know that voice.
Hello, Anthony. I love it when people turn their video feeds on. It's just good to see people's faces. All right, looks like we're starting to get some more people in here. I should probably work with the Next Gen Professionals group to see if I can post the real estate club announcement in a few other locations.
I thought you meant like Next Gen, as you're saying you're getting too old, you're saying. But
Oh, no. The Next Gen Professionals Network is the 20s and 30s engineering network here at Intel.
Oh, nice.
And yeah, they won't let me in. I'm too old. No. They've been great to work with. We've been working with them for like 2 years now.
Very cool.
So yeah.
Yeah, just use a little, color in your beard a bit, and you'll fit in.
This is what makes me look distinguished.
Exactly. Yeah.
I get a lot of mileage off this. All right, looks like more people are joining. And we'll wait for, say, another 2 to 3 minutes and then kick this off. If you're new, welcome. This is the Intel Real Estate Investment Education Club. We bring in a new speaker every single week, and we hear about their real estate expertise to help you with your real estate investing. So if you are interested in a particular topic, please let me know. I'm also going to say at the outset here, Intel, the only way that they let us advertise this event is by word of mouth. So if you found value in this group, please email the invite to a friend and let them know that it's out here, because I have to imagine with all the good emails that I've got that there are a lot of other people out there that would get value from this group. So feel free to send that invite on. And we're at 30 people here. Hey, I want to go back. Has anybody had any friction with the registration system and just getting on to the Zoom call? Is there any bottlenecks or problems or frustrations that anybody is seeing there? I want to make it as smooth as possible.
It took a couple extra clicks. So I tried to copy and paste the link in because when I clicked on it, it wouldn't open right away. And then put it in, and then all of a sudden it came up and says, we want to join already in progress. Yeah. So then I clicked the launch area from the meetup rather than the email itself.
Okay. But you made it here, and
I made it here.
Okay.
Yeah.
Yeah, I kind of wonder about that, because I think in between using Microsoft Teams, when we switched over to Zoom, we lost a fair number of people that aren't. I don't know if Zoom's the reason or not, but it seemed to happen at the same time. All right, we got a chat. Everyone's welcome next gen. I'm sure they'd be happy if you showed up, Daniel. Well, where do I show up, Mike or Mick? I would love to show up. Let me know where. I guess I could ask Dennis that also. All right, it's good to see familiar people in here. We're going to kick this off in a few minutes. We have an exciting speaker today, and he is, I really enjoyed doing the screening call with him, which, gosh, how long ago was that? It's like 6 weeks ago now.
Yeah.
Yeah. But
I think it was before my my trip to Paraguay. So yeah, it's been a while.
Yeah. So it's been a little while. I really enjoyed that call. You're a dynamic personality, and you're investing in an interesting area, an area that I think a lot of people are discovering right now. It's going through a discovery process, a lot like, maybe 10 years ago, multifamily went through a discovery process. Over the last 3 to 4 years, mobile home parks have been going through a discovery process. Self-storage has come onto people's radars. And this is another asset class. So, Don, why don't you give us a quick introduction to yourself and let us know what you do?
Sure. Yeah. And I do have a PowerPoint presentation whenever you're ready. We can start that.
Oh, yeah. Go ahead and throw it up.
Am I going to get it
or
up there?
Maybe I should say put it on the screen. It's a better way to phrase that.
All right. Let me see here. I have the rights to share screen. Let's see here.
Do you? If not,
Yeah.
I can.
Yeah.
Okay.
I think we're good. Make sure does everybody see that?
Yep.
All right. Now I can get the finger to start it. Hang on. Oh boy. Yeah, you got me. I'm now flustered.
Well,
ready to go?
hey, if also, I guess I'll say, if anybody has any questions, feel free to put them in the chat. Or Don, if you want, we can say people are free to judiciously interrupt. Up to you.
Yeah. Well, yeah, I definitely I'd probably prefer if we can wait till the end for questions, just to make sure that we have time to get through. I don't have like a long presentation, maybe 10 minutes to get through everything, but it is kind of a lot to cover at the same time. So, I hate to have to cut off at the end and miss part of it. But
okay. Well,
anyway,
go ahead and put your questions in the chat, and that way we'll have a running record of them.
So again, my name is Don Spafford. Thank you everybody for showing up here. I currently live in Idaho Falls, Idaho. If you have any idea where that's at, it's eastern Idaho, southeast Idaho, about an hour and a half away from Yellowstone Park. And I have been, so I guess I'll start my background, my professional, educational background is all about finance, investment science, portfolio management. I grew up around Omaha, Nebraska. Went to school at the University of Nebraska, Omaha, basically across the street from Warren Buffett. So I was kind of following that securities investing, plan for my future to become a money manager, something like that. But my wife became a realtor about 10 years ago, and that's kind of where we really started seeing some other options besides, of course, the market crash of 2008, which really affected a lot of things. So we've been actually investing in real estate for about a little over 5 years now. Started with some small multifamilies, and then graduated into commercial real estate. And over the course of the last couple of years, as myself and many other people, as Dana mentioned, we're trying to get into more multifamily apartment syndications. I quickly came to the realization for myself anyway that the returns there were not great enough for what I was going after. I have very high expectations of the returns I look for in the properties I buy, and the multifamily space just was not cutting it for me. And then so about a year ago, I discovered this space of RV campgrounds, and then I met up with a couple of guys that had just purchased their first one, and they'd actually the ones that had formed Happy Camper Capital, which we'll get into that here. So I'm here to talk about Happy Camper Capital, and then you also see on the screen Beyonder. That's a sister company. We'll get into that here in a bit. So what we do is, of course, we're here to help people to build wealth, create income, and have fun along the way with great experiences for our investors and also for the users of these campgrounds. Here's our executive team. So Adam Lendy and Justin Hoggett are the two founding partners. They both live in the Denver area. They both have extensive backgrounds as well in real estate. Adam was a commercial broker, was a productivity coach for Keller Williams for many years. He still is a business coach as well. Justin Hoggett has a very extensive multifamily portfolio. He created a property management company in the Denver area as well for those properties and for others. And then, of course, myself, I said, I'm here. I joined the team officially last year and have been a key player and help us to grow the company and our of course, our profile to get noticed by people like Daniel to invite me to groups like this. I do a lot of we'll say the outward, I guess PR stuff, even though I don't consider myself a great orator by any means, but I go on a lot of podcasts and things to help spread the word of what we're doing. So what is that we do exactly? So as mentioned, we purchase RV campground resorts. We find these properties in almost all cases. We'll call them off market. We call up the owners directly, get a hold of them, try to see if they're willing to sell, work out a deal with them, and then get that opportunity to our investors to invest with us in these properties and produce very high returns for everybody involved. In many cases, as we'll get to, we have things that you've probably never seen for other possible lease real estate investment opportunities. And most of our deals, we actually have them as 506B, which means you do not have to be an accredited investor to get into those. And the reason we do that is because our ultimate goal is to help people become accredited investors. So we want to help the average everyday person get in these types of deals and opportunities to grow their wealth and create the income that they're looking for, so they can also reach themselves their financial freedom. Okay, so again, we're talking about RV destinations, RV campgrounds, not mobile home parks. There is some confusion at times when people hear the word RV park. They think of mobile home park. We do have actually a distinction of what a mobile home, or we'll say what an RV park is versus an RV campground or RV destination resort. So I'll get that first. So basically, we consider RV park. It's kind of like the side of the highway thing where you pull over to sleep because you can't go any further. That's not what we buy. We're full on destination places that have like fun amenities, swimming pools, a lake, possibly concert events, different things going on that will bring people there. So why do we buy these places? Well, they are nearly recession resistant. So even when there's things going on in the economy that may prevent people from taking a trip to Disney World or whatever, if you are an RV owner or you have a camper, you're still going to get out and use those toys. You don't want to just sit in your driveway not being used. So we target properties that are within a 2 or 3 hour drive of a major city. So that way these people that own these will still go out and use them. So we have no fear of losing any real business to keep these places cash flowing. We are purchasing at a higher cap rate, as compared to most other things. So like Daniel was mentioning, the multifamily, self-storage, mobile home parks, those are all pretty hot commodity right now because everybody's doing them. So if everybody's doing it, means you're paying more for it. You may have seen some other multifamily cap rates probably in the sub 5, like some maybe 2 or 3. We are generally purchasing around a 10% cap as of right now. A couple years ago they were 12, so they are getting compressed a bit. There's more competition coming in the space, as Daniel mentioned. People are taking notice. These do produce a lot of cash flow. The reason for that, if you're, I'm assuming everybody here is familiar with real estate investing, you all know. If you want to compare, think of short-term rental, like Airbnb properties, they'll tend to produce much higher income than a standard standalone single-family rental. These campground spaces are essentially like a short-term rental, but at a multifamily scale. So they produce a lot of income. There's a lot of current RV owners out there. Millennials, your next gen group, are in the largest group of these new purchasers. They make up the largest group, and I think a couple reasons for that that the pandemic really pushed forward. I think is as people began to work more remotely. You don't have to be tied down to a certain city or place. So it's like, why not take life on the road and go work remotely or live somewhere new every week or month. And then many people that were getting priced out of homes. There's too much competition. Their houses prices are going way too much. And so if you can't buy a house, the next big thing is just, just buy an RV and take a road trip. So there's a lot of that going on. And just in general, again, they're fun. If you invest in a multifamily or self-storage, you're probably not going to go, live there or hang out and have a party with your friends. But these campgrounds, you actually can. You can go there and have fun and just have a good time and create memories for you and your family and friends. So again, as investor side, you guys, if you're an investor on deals as limited partners, again, you will receive high cash flows as compared to most other things you may have seen. To just give you an idea what we target as just general terms, and we'll go over some examples later on here, but as general terms, what we target for is an average of a 15% cash on cash, annual. So we may start out year one around the 10%. By year 5, we're near a 25% cash on cash. So that the average works out about 15 over that time period. And of course, then with the part of the appreciation point here is you will see between a 2.5 to 3x multiple over that 5-year hold. So essentially, you're tripling your investment over that 5-year period between the cash flow and the equity. And we do take at times as little as 25,000 as minimum. Our average is probably more around 50. We have had some at 100, but there are those opportunities to get in with 25,000. And again, you can invest where you play and play where you invest. You go there and have fun. Beyonder, like I said, is our sister company that does our campground management. They put all the systems in place, the software needed, hiring the new staff, training them, putting all the optimization. All right. So they oversee the CAPEX expansions we do. As we purchase these campgrounds, you might think, what kind of value add is there on the campground? Well, there's many things actually. We do lots of. First of all, the one thing is the website. A lot of these places are mom and pop operated. They've owned them for decades. Haven't done much to modernize it. They take phone call reservations only. So we'll come in there with our systems and our website to get online reservations, so you don't have to make a phone call. That alone will attract more people there. In typical, just doing that alone increases the income by at least 5%. We increase the amenities there, build on structures that may have not been there before, or if they were there, we make them better, such as like a convenience store or things like that. Have better Wi-Fi connections. Increase the electrical connections. As we see now more electric vehicles coming through, we want to be able to handle those travelers. So if they're looking for where to go, they want to find one that can actually handle their vehicle. And then we look for ways to add on fun things. So as mentioned, we have one currently that we close on in May that we're going to be adding in an amphitheater there to do like weekend or summer concerts, to bring people there to not just for camping. They want to come out and just have fun and do other things. If there's a lake on site, we'll have so like paddleboard or boat rentals or something. So lots of different things we can do, and the Beyonder helps kind of oversee and manage all of that for us. So how you can invest with us, of course, is as I mentioned, we do one-off syndication deals. So you can come in with your own funds and invest with us individually. You can if needed to or wanted to, you can come in with an entity such as an LLC you may have, or a trust, whatever it may be. Use self-directed IRA or 401k. We can take any of those. You can even, if you wanted to, create a fund and do that with people So again, these are 5 or 6 Bs, which means we do have to have some type of a pre-existing relationship. So if you don't already know me or someone on our team, the first step would be to schedule a call with myself or somebody else on our team, have us get to know you and who you are, your investor profile, your risk tolerance, and those kind of things. And then be prepared, kind of learn as from our previous or current deals that we have, to kind of see what we're doing, see if it's something that fits what you're looking for. And then when one comes along that you like, just be ready to invest and submit your soft commitment on our website, and then sign the PPM documents and get your funds wired. It's pretty simple. So again, you want to see some examples of what we're talking about to see if this is really what we're talking about here or not. So I'll give you a couple examples. These are both I'm going to have 2 very, very brief examples. These are both closed properties, so they're not available to invest in as is right now. So Sleepy Hollow, this is one that was in Iowa. As you see, it's got a nice little lake there, nice little property, and it had about 26 acres, 126 existing RV spots, a few cabins and some mobile homes on site. About 50 to 90% occupancy depending on day of week and time of year. This one, for example, was a lower purchase price. We got it at over 1.6. including the down payment and the value add play is, we're raising about almost 700,000 on that one. Minimum investment was 25,000. As you can see, those returns are great. We were expecting a year one, a little over 10% cash on cash in year one. Our actuals were over 12%. So we beat those first year expectations. This one here, Little Farm RV Resort, we've actually renamed this to Rising Sun. This one's in Indiana. This is one we just closed on a few months ago. Again, it's got a little pond there. It's on the river. Some other like pavilions and things on site that people can come for different events or corporate getaways and whatnot. So again, this one's about just shy of 30 acres. Plus, it had almost 4 acres to expand on. So we are going to be building this one out, adding on more. This is actually the one I was telling about that we're going to add in that amphitheater to do the outdoor concerts and get people to come there for things besides just camping. And of course, using those, like you see that picture there, almost like a barn structure. Those are great things to have, like dances and things that people out there for other stuff besides just camping. And we, of course, and most of our sites, we typically have some cabins or other glamping experiences as well. So people will come there. You may not have a camper RV, but you want to come here and still stay. There are places you can still rent at a short term, like again, cabins or some camp model RVs to stay there and get your Instagram pictures. So this one, a bit more of a purchase price, so 3.4 purchase price. We raised almost $2 million on it, again, for the down payment and our expansion plans. This one, again, had a minimum of 25,000 to get into it. We were expecting, an average of, let's say 11 plus average over that 5-year period. We do, of course, expect to outperform those numbers. All of our projections, we always very much are very conservative on our underwriting with them. We recently did a webinar on another property, and we explained that the current, just to give you an example, the current rents for the overnight stays were I think at $30 a night. Comparables in the area are closer to 50. When we did our projections, we did not do anything near 50. We only raised those current rates by $5. So we did our projections at $35 instead of 30, knowing that we most likely will get up to the full market rent or better, because we're going to make this place even nicer. But that just gives you an idea of the very conservative numbers we were looking at. So even with conservatively speaking, we're hitting very high returns as compared to most other things. Except for we know we're going to very much outdo those numbers. And I do want to invite you guys all here. August 4th, we have a special webinar presentation. We do a lot of education on our platform besides just getting people to invest with us. We like to present other things that people can learn about that has nothing at all to do with us. This one, we're going to have a guest speaker come to talk about how to create a fund. So again, you guys, if you all would want to, you could look into creating your own Intel fund. You can all invest in that together and purchase on multiple properties as you would like to. So that's on August 4th. That'd be at 4 p.m. Pacific time. You see up there, you can basically go to our website and then go to the blog tab, and that's where you'll find a link. I'll throw a link later in the chat as well, but that's how you can find it if you're looking for it now. And then here's my information there if you want to get a hold of me. Of course, again, go to happycampercapital.com to learn more about what we do and see some of the opportunities we have available or that are coming up. You can contact me directly if you want to reach me by email, and that's my actual cell phone number there. You can call or text. I'd be happy to answer any questions you have. So now, we'll open up for questions now for those that have them.
All right, we got a ton of questions in the chat right now. So the first one is from William. What did vacancy increase when gas prices went up?
Yeah, that's a great question. So it has not really affected us, honestly. Again, like I mentioned, the properties we target are within a short drive of a major city. In some cases 2 or 3. So we've tried to have as much population nearby as possible. So again, people are not likely taking as many cross-country trips, but they will still drive a few hours to get out and have fun. So yeah, we have not seen a dip. In fact, the campsites still are very much packed and fully booked during summer right now.
All right. Next question. What are the largest CAPEX expenses that you usually have when acquiring a property?
Typically, the biggest are going to be the expansion. Like I said, we like to add on more campsites. That's a mixture of both the RV pads, dry camping areas, which of course that doesn't cost too much there for add on like tent camping and stuff. But adding on those utility connections is a big factor for those additional RV pads. And in some cases, we'll build on some cabins or things on site for those short-term rentals. So those are typically our biggest budget expenses for that expansion.
I'm curious, what does it cost to put in utilities at an RV site?
It's going to depend and vary, of course, by area, where it's at, and what's nearby. But I think it's depending how far we have to run them. We'll say just connecting. It's usually not too bad. Honestly, it's about maybe 5,000 per site. 5 to 10,000 per site, I'd say. But typically we're adding on like 30 or more sites. So that can add up pretty quickly.
Okay. Ashish is asking, do distributions vary due to the seasonality of the product?
Great question. Yeah, so it can, and we do purchase across the country. I did not mention that. So we're not region specific or state specific. We don't say only purchase in Southeast. We purchase across the country, everywhere. So there are some properties that are going to have more seasonality than others. We of course still run our projections and our analysis based off the income it produces, not necessarily the time of year it produces. There's even in say warmer climates, Florida, Texas, California, there's still some seasonality in that. People can go there all year round, but more people have more time during summer generally anyway. So there still will be some seasonality no matter what anywhere. But with what we do to get around that, some properties that say generally the current owners close them down during winter. Most of these properties are, again, owner operated. The owners are doing the job of 10 people themselves, and so they can't really handle a lot. Which is why when we come in, it's much more, we can make it much more efficient and run smoother, which makes it more profitable. But so a lot of these places will close down during winter, and we found ways we can still produce at least some income during winter. So whether that be the cabins that are on site that we can still rent out as a short-term rental for people that might be like near a ski resort or something, or just want to get a family getaway gathering or whatever, they'll still rent those places. We may have some that are like more long-term stays that will want to just stay there, pay like a long-term reduced rate to stay there during those winter months. There's other creative things that we can do as well. We often, one thing that will still produce income is people that aren't using their campers or boats during those winter months will pay to store them. So we can have that RV boat storage available for them to pay for that spaces. And then from there, it's kind of the sky's the limit. We've got that first campground that I showed you for the example, Sleepy Hollow in Iowa. This last year, actually, we had a local business owner there approach us that would like to rent out the full campground space during winter and run a drive-through Christmas light display. And then, we'd still produce some income from that as well. So there's multiple things we can still do to create some revenue during winter. But yeah, in general, I would say you probably could expect those your total cash flows to come down some during those winter months. But even with that, we're still looking at a year's worth of cash flow of 10% plus, even from the very start. And we do pay out right away. There's no like hold back for the first year CAPEX. We pay out the very first quarter end, and yeah.
What percentage of your leases are short term versus long term? And what is a long term? Is that a month? Is it 3 months? Is it?
Yeah, so we generally prefer what we call transient stayers. The people that are stay for like say overnight for a week, maybe a couple weeks, whatever, and then they leave. We do have some we call them like seasonal stayers that will stay like for the full summer or full winter or whatever. They'll be for 3 or 4 months, and then there are some that are more like long term, pretty much live on site. We prefer to not have any of those long term like people that are living there. That makes it feel more like a mobile home park. If there are some like that are there when we take over, we try to either increase their rents to the point where they want to leave, or if they stay, I guess they'll just pay more. But we prefer to have more of the transient stayers because that's where really the income comes in. So we'd like to have, over time, we build out that to be a much higher percentage of the transient campers versus the shorter term or mid to long term stays. But we have had some that we like the transient population is a lot less. Again, before the owner operating campground owners, it makes it easier for them if people are staying long term rather than having people come in and out all the time. So we do have several that start off higher with the long terms, and we transition them more to that shorter term, overnight stays or short term stays.
What are the tax benefits that are associated with something like this?
Sure. So it is obviously a little bit different than multifamily. We don't have a large building structure to get your full 100% depreciation year one, but we do have depreciation that we do include as well. So it still is commercial real estate. So there are still some depreciation benefits and cost segregation that's done. We typically do our larger depreciation after year two, after we do that expansion and add on all those utility costs and building costs. So after year two is when we see a larger depreciation come into play. And I can't really give you a number because it's going to, of course, vary by location, property, and what we do. Because it's not just a standard building structure that's already there. But you can expect some depreciation there as well.
Okay. Let's see. I think you talked about whether it's deal by deal or investment fund. Do you do any investment funds, or is it all deal by deal?
As of right now, it's all deal by deal. We are actively looking into creating a fund ourselves to kind of more easily help us acquire more rapidly. But as of right now, it's still deal by deal.
Okay. What do your staffing expenses look like, and how many people do you have as an on-site staff?
So again, with Beyond Our Camp, that's our campground management company. They oversee all of that. So each campground will have a campground manager, of course, that kind of oversees everybody there. And then there'll be several staff members, depending on how big it is and what's all going on. You're going to have people run the convenience store, have people to kind of manage like the boat rentals, or maybe run a bait and tackle shop, or oversee other activities that may go on. If we'll say, hey, we're having like a family I don't know, painting activity or whatever, so there'll be different staff on hand to oversee each of those different activities and things that are needed to be done. And then, Beyond Our Camp oversees and trains the staff for that. And so again, that will vary by location, depending on how big it is and how many people will need to be staffed. But I'd say on average, we probably have at least 10 to 15 staff, because we of course want to have people that can rotate in and out. We can't make people work 24/7 year round, so people need vacations and time off. So we'll typically have at least a few full-time and several part-time staff members at each campground.
Okay, Glenn, did you get your ROI question answered already? Okay, cool. Anita is asking, how many of your deals have gone full cycle?
That's a question we get asked a lot. So as Daniel mentioned, this is a relatively new space for syndications anyway. Like he was saying in the beginning, if you want to compare it to, say, mobile home parks or self-storage 5 years ago when really nobody was doing them, and then all of a sudden they just exploded and everybody started doing it. And as of that point, 5 years ago for them, when they first started, nobody really done that full cycle either. So for us right now, this is still a relatively new space for syndicating campgrounds. So we do not have any deals that have gone full cycle with us that are specifically campgrounds. And at the same point, neither has anybody else. There are several other groups I know of that are also syndicating campgrounds. None of them have gone full cycle on anything because it's all still relatively new. So yeah, I cannot say based on our track record we have done so many full cycle campground deals. But members of our team have done many full cycle other real estate deals, and we have lots of experience with that. But yeah, for specifically our campgrounds, we have not had any that have gone full cycle just yet.
I would have to imagine with a very heavy cash flow business like this that maybe, and this goes down to Brooke's question about your exit strategies, but it seems to me like a buy and hold strategy is a great way to go here. Do you actually plan to exit these properties, or are they simply buy and holds?
So yeah, we do have a 5-year exit plan.
Okay.
And you'll see in our projections on our on our offerings, we do not throw in there like a refi in year 3 or 4, like or something like many multifamily do, for a couple of reasons. One, because that will skew our total IRR if we don't do it, or if it doesn't work out as planned, based on interest rates or whatever's going on. So we don't plan for a refinance in the first few years. If it makes sense to do so at the time, we will definitely do it. But the plan is for a 5-year hold. So at the end of that 5 years, depending on what's happening in the market, we will either list it openly on the market I'm assuming it, again, 5 years from now, just think of like, mobile home parks or self-storage were 5 years ago now. 5 years from now, this could be, a totally different space with lots of different people in there trying to buy everything, which would be a great time for us to sell. So depending on what's going on in the market, we'll either list it on the open market, or the end goal would be we have an end buyer in mind that will for sure buy it no matter what, and that is Beyond Our. So we plan to transition these over to Beyond Our Camp at that 5-year period, and essentially purchase it at market value at that time. And that's in our PPM documents that we talk about. If there's any type of conflict of interest, of course we plan to do a third party appraisal on the property and pay that value at that time. But at that point, of course, all LP investors will be cashed out, and they will still meet or beat those expectations of that 2.5 to 3x multiple with a 20+ IRR.
So did I understand that you list them on the open market or that you sell them all to Beyonder?
Well, the plan is that Beyonder will ultimately hold them all. Again, depending on what's happening in the market, if the markets are crazy and people are paying insane prices above what it's actually worth, we would look into selling at the open market to provide higher returns to our investors.
Okay. Let's see. What is? Do LPs get any discounts for staying there?
Unfortunately, no. As of right now, we don't have that in the plans. The reason for that is, we do have hundreds of investors with us, so that we don't want to affect the overall returns for our other investors. So we don't give away free nights, but of course, you are always all welcome to stay at any time in any of the campgrounds. I always tell people it gives you a great conversation piece. You go hang out with some friends and family, and get to bring up a conversation about investing in real estate and tell them you're a partner in this campground, and kind of blow their minds and talk about how that happened. So,
Glenn is asking, do you have a business where you actually acquire campers and rent them out to people, or do you try to have them all tenant owned?
Yeah, we don't have any that would be rented to campers, other than, of course, like I said, some camp models where people would stay like overnight and leave, but not like a rent to own or anything. But we do have several of our campgrounds. Well, we are likely partnered with a local RV distributor seller that would sell RVs on site, and provide us a percentage of those sales. But yeah, we don't have any that we sell directly or rent out directly, other than, again, camp models that you can rent overnight.
Okay. I recently discovered the website outdoorsy.com, which was kind of told to me as an Airbnb of RV rentals. Do you guys do relationships with groups like that, or is it merely the tenants get their RVs there and then they separately contract with you and drive them in?
Yeah, exactly. So yeah, we don't have anything that works, at least as of now, with groups like Outdoorsy or essentially like that. That's more like Turo. If you're familiar with Turo, that Outdoorsy like Turo for RVs. But yeah, we don't have anything as of now. Anyway, who knows what's going to happen as we continue to grow and we become a very, very well-known space or known name in the space. But as of now, yeah, everybody would just come there on their own and just you prepay to come and stay. You rent out how many nights you're going to be there, and then you pull in with your RV or camper and just stay there with what you bring.
All right. There's a question. Augusta has a question on hurricane season in the Southeast. Do you have any effects from hurricanes there? And I'll actually tack on to that question too. What sort of insurance do you need to cover for natural disasters or other types of events, tornadoes, fire, whatever?
Sure. Yeah. Well, that's obviously always going to be a concern pretty much anywhere, no matter what you're in. There's always risk of tornadoes and hurricanes and earthquakes and all that kind of stuff. So,
oh my,
yeah. So we of course can't necessarily foresee that and say this is going to happen, but we of course want to be prepared for it and have risk set aside for it. So yes, we do pay for additional insurance for those types of things in areas where that makes sense, that where we needed. We on these campgrounds, again, there may not be necessarily a lot of structures to insure, but we do have a good amount of liability insurance for anything else that comes up. People get injured or things like that, natural disasters, areas that maybe get hit by more tornadoes and things. We have storm shelters in place. So like the ones in Iowa have storm shelters typically. To have a place for people to go if there would be a tornado. And same thing with hurricanes. That could affect a little bit. Hurricanes, of course, usually don't mean they're lasting forever. They hit for a few days and they're gone. Might be some cleanup afterwards, but yeah, it overall would not affect the numbers. I mean, any property we're looking for in an area like Florida that may have hurricanes, they would have seen them in the past already, so that would ought to be included in their own the income the property has made in the past, and so we would just take that into account, and that would build up to our overall assessment of the property.
All right. It sounds like we have some people in here that are thinking summer thoughts. And so Jenny's asking the question, do you have any camping sites in Oregon, Washington, or California? And then Dennis adds on, or Arizona.
Well, I could say we don't have any yet that are in those areas that we own. We have a few that we are looking at, again, across the country. We have looked at some in Oregon and Washington. I'm actually personally myself looking at one here in Idaho. California is a market we don't necessarily pursue because of different, the tax laws there and things. But if we have one sent to us, we will look at it and consider it. But yeah, we look to continue purchasing more. We've got a lot of deals in the pipeline.
I'm not sure I quite understand this question, but what is the range of percent income for your property portfolio, highest to lowest? I maybe they're asking what sort of. I don't know if that question makes sense to you. You can answer, but if not, we can go on, or we can get a clarification from the person who asked it.
Well, sure, yeah, we may get some clarification, but again, I'd say like. Our properties, let's say we target an average of that 15% cash on cash. If you refer to the cash on cash returns, you're talking about overall ROI, IRR. Again, as of now, we've got the ones we have. I'd say so far, if you're talking about projections or ones we currently have operating, of the ones that are currently operating, yeah, we're over 12% average or annual cash on cash as of right now. After that first property, so we finished our first year of ownership on that Iowa property a few months ago. That first year beat the expectations by almost 3%. We always say expect above 10% is what we say to expect, no matter what.
All right. Do you have any underperforming properties right now, and can you tell us a story about what happened in that case?
Well, for Happy Camper Capital, no, we do not. Me personally, yes, but for Happy Camper, yeah, the properties we've acquired so far have worked out, as or better than expected. We have one where I guess I can say maybe when we're in process of closing on right now. We're closing on 2 next week. One of them. It's been extended out quite a while. We had some problems with the sellers and with the Army Corps of Engineers actually as part of this one. So that caused some issues, and then we had we're supposed to close on it today, but we found out yesterday or the day before from the sellers that the title company that they had asked for or were using got bought out by another title company and lost the file, I guess. So we took control and found a new title company that can kind of quickly put all hands on deck and get it ready to close for us by next Tuesday, hopefully. So those are yeah.
I was going to say, I've heard a lot of reasons for closing dates being pushed back, but title company getting bought out and losing records, I hadn't come across that one yet.
yeah, that was kind of a bit of shock when we heard that. I'm like, what? But as long as that's not our fault, we're okay with that. Yeah.
Let's see. Oh, Glenn is asking more about your acquisition process, which I'm actually very curious about too. You said that you called direct to direct with these people, and yeah. I have to imagine if I'm a mom and pop and I'm sitting here, I'm getting a lot of phone calls from people going, "Hey, do you want to sell? Hey, do you want to sell? Hey, do you want to sell?" How do you break through that noise?
Well, first of all, the good thing is there's not a lot of people calling them yet anyway. Okay. So we may not be bothering per se, other than maybe some brokers that are calling them. But so I guess I didn't cover our acquisition criteria. So besides, I said the location where it's at, that 2 or 3 hour drive of a major city, we also look for ones that have at least 100 existing campsites. That can be a mixture of RV, cabins, dry camping. So we want the size. The size matters in this case because we need to have that economies of scale to pay for the staffing and everything. So the good thing about campgrounds to help us find these properties as compared to most anything else. 1 second. Sorry, my throat's getting a bit dry and scratchy here, but. So the good thing about campgrounds is we have a easy to follow directory. So if you want to go, say, camping in Idaho, Colorado, wherever it may be, you can look up a directory called Good Sam. Good Sam lists all of the campgrounds right there. So if we're looking for a specific area, say, hey, I want to go find something in Missouri or find something in Ohio, we'll follow that directory of Good Sam. Look for properties, kind of find the ones about the size we're looking for. and call them up directly. And as we mentioned, most of these places are owner operated. So if you call the campground, you're very likely to reach the owner and talk to them directly. And in most cases, yeah, again, if these are owner operated for a while, they're either at or getting to the point of being burnt out. They're doing a lot of work and getting tired of it, and they see it possible an opportunity to cash out and go retire. So there's that option. And of course, with our campground management company, if they're not ready to sell just yet, we at least try to upsell them on the management of their property. It's like, hey, okay, you're not ready to sell yet. That's great. How would you like to get your time back? We can come in there, hire us to manage your property for you. You still get your returns, your cash flows. It's still your property, but you have your time to go and do what you want. And if we can do that, at least, get in there, get our foot in the door, basically, then we'll take over the management. So the day comes when they are ready to sell, we're already managing it. We're easy to take it over from there. But that's essentially how we're doing it. We just call them up directly, and again, in most cases, we can talk directly with the owner. So all of our properties are, it's not all, but most of our properties are direct to seller purchased. We do have some that are brought to us by brokers, but most of them go direct to sellers. In some cases, like the two we're closing on right now, are both seller financed as well. So it makes it quite easy for us to get in there. You're on mute, Daniel.
I was going to say, speaking of seller financing, that's a great deal where the seller, is getting a monthly cash payment, but they're not operating the property anymore. Ashish has a similar scenario here. He says that in Oregon, our public campgrounds are often operated by private operators with long-term lucrative leases. Have you ever considered using your economies of scale to just take over the leases and get cash flow? And I suppose that would relate to triple net leasing out the operation of the property. Have you considered just buying it and turning over the running of it to a completely different group that pays you a fixed amount?
We have not. No. We like to see, I guess, I don't know. I guess that's not something we really considered, I guess, to look into. But typically, again, we like to go on there and do value add to increase the income, increase the value of the property, and provide high returns for our investors. And of course, since we have our own management of it, we would not see any reason to pass that management to somebody else or
Sure.
Even lease out the space to somebody else. That kind of defeats the purpose of what we're trying to do.
Hey, Ashish, if you were trying to tease out a different scenario, feel free to come on and explain where you were going with it as well. And in the meantime, he was asking about, do you accept funds from IRAs?
Yes, we do accept from some IRAs, 401ks, pretty much anything you've got that we can work out.
All right. Let's see. I think that's all the questions that we have inside the chat. We went through that really quickly. Anything else that you'd like to tell us or to leave us with before equity split? I missed the question on equity split with the investors.
So our deals, we generally are shooting for a 65-35 GPL or LP-GP split. As the LP investors, you get 65% of the deal, and we have a waterfall feature as well. So after we hit, I think in generally about 20% IRR, then it shifts to a 50-50 above that point.
Okay. I actually missed my own question. I typed in here too. Do you maintain strategic relationships with nearby groups to help run events or hold summer camps, or what sort of strategic relations do you have to basically increase the occupancy?
Sure. Yeah. And yes, we do that. In some cases they're existing. In some cases they may have stopped for whatever reason, and we look to restart those or do something else. But yeah, so it's all going to depend on the location and what's around it and what works for the area.
What's common? I mean, is something like a summer camp program, is that something that's common, or is it like country night music?
There's common. There could be some cases like 4-H type events, where people come out there for stuff. In most cases, it's gonna be something outdoor related, but we do a lot of family gatherings, like family reunions. In some cases, like wedding receptions. There might be like that one picture, big barns or something there. People come rent out for the space to do wedding receptions or other big parties or corporate events. We had one in Florida. We were we were trying to acquire about a year ago. We were near completion with the owner. In the end, decided to back out because he was planning to invest with us in his own property and saw our plans and decided he could probably do it himself. So he backed out.
Oh, no.
And actually then later relisted it on the market for like twice what he was selling us for. But anyway, so that one, it was a very large property near a lot of like retirement communities. So that was one, for example, where they do a lot of local events for people to come out for like square dancing and different kinds of things like that to get people that are there nearby that aren't there for camping, but they come for those other fun activities. So we look for anything like that. We can do like a community, like you said, community outreach or something to bring people there that are not your traditional camper that come for other things. Again, like we're gonna have like concerts, right? People come out for a concert that may have never stepped foot in a campground before, but it's gonna be an outdoor event. They'll come there and have fun. While they're there, maybe spend some money on some other stuff. Go rent a paddleboard or something. And so yeah, we look for things we can do to bring people there for other things.
Very nice, very fun. Ashish is asking another question here, and this actually touched on a question I was kind of thinking about too. You mentioned that depreciation is lower than a lot of other investments because there's not a building sitting there in a lot of cases. Yeah. Mobile home parks, obviously, they've got a really big depreciation bonus up front. How is it that you're different from them? And Ashish is asking specifically about manufactured home communities will sometimes even offer, 1.4 to 1.6x bonus depreciation. Seems like the bonus depreciation is kind of all over the place depending on your tax carve outs. Right. Do you have any comments on your ways to I guess, do you have any comments comparing yourself to the other mobile home and manufactured community depreciation rates?
I'd say for the mobile home parks, it's going to depend on what type of mobile home park. So myself, most people that I know that own mobile home parks, they don't actually own any of the mobile homes. They just own the camp, the mobile home land, I guess, and they rent out the lot space to people. So even them, there's not necessarily a lot of depreciation either, because again, there's no real many structures that they own on site. All the homes are purchased and owned by the people that are staying there. And so it depends on what type. If you're looking at ones that the mobile home park itself owns all of the buildings, then yeah, there would be much more depreciation there. But as far as I know, most people prefer not to own them, so they don't have to maintain them. So with us, again, it's kind of a similar thing. It's mostly land, so there's no RV trailers or whatever on site that we own. It's just land with some those utility connections, and then some buildings, there'll be like an office, a bathhouse and some other smaller structures. But it's not like a full-on large building taking up all the land space. So yes, there is definitely depreciation, and again, it vary by location and size and what's all there. We have talked to several cost segregation people. Some of them are pretty well known that some of you guys may know. And they say, of course, there is several options that we can do to get higher depreciation on them as well. But again, it's all going to vary by location and what is there to do.
All right. And, speaking of which, next week we have a depreciation speaker coming in, and I'm trying to pull it up right now to bring up his name, but next week, cost segregation will be our topic.
Here, I'll stop sharing this way.
Yeah. And so Glenn is also asking, William is asking, what type of overhead does an RV park have? And maybe I'd break that down into what are your major expenses and how do they break out?
Yeah. Well, obviously the biggest expense is going to be staff. We've got to pay the people there. Probably next to that is going to be insurance, probably. So yeah, those expenses can be a lot. There's some that we go do to again improve the value, improve the overall revenue income is charge back some of those utility costs. Many of these owner operator campground owners don't charge the people there for connecting to water and electricity, those kind of things. We are looking to add in wireless meters that can charge them for those usage. So if they come, especially in the case now with more electric vehicles coming through, one night of an electric truck charging is going to probably suck up more energy than a full month of a standard RV. So we are implementing ways to charge back those utility costs back to the people that are staying there, which is going to reduce our expenses for the utilities and increase that revenue as well. But yeah, so the biggest expenses are generally going to be your staff and possibly insurance. I'd say they're probably the two biggest line items. Aside from that, there's really not a whole lot. Again, we're not replacing carpets and appliances and repainting and all those kind of things you do with a multifamily after every turnover. There's some cleanup there and places will have like a restaurant or a convenience store or something on site. We'll have like a larger cost of goods sold just for those specific products. But that's pretty much mostly it. I mean, there's other minimal things in there, but those are the bigger things. And again, get a vary by property, but even with that, again, we're still achieving very high returns as compared to most anything else you've seen.
Okay.
So that's really not a major factor that affects and reduces our income.
I was going to ask, there's a lot of fear about the economy going on right now, and it sounds like your business is fairly recession resistant. But there might be areas, maybe gas or other areas. Are there any areas of concern going forward if we have an economic downturn?
Yeah, well, of course, there's always concern there, no matter what, and that's for everybody everywhere.
Sure.
But kind of overall, going back to what we were talking about before, that kind of what we do for some risk aversion for those kinds of problems is, again, the location being the biggest factor. People that have these types of RVs and campers and boats, whatever, they want to get out and use them. And in most cases, I'd say that the average, we'll say that the average RV owner typically is having higher income than the average worker to be able to afford those types of toys. It's more like a luxury item, really. And I'd say overall, those people that own those are not as much of risk of having being badly affected from a economic downturns and things. Of course, that's not across the board for everybody, but I'd say in most cases that's the scenario. So those economic downturns don't really affect overall too much. Those people are still going to go out and have fun.
All right. I think that's all the questions we have here. We had one more about cost segregation. If you do a cost segregation, are you including your value add additions, or are you doing it up front? How does that work?
Right, and that goes back to why I was saying we would typically have a larger distribution or larger depreciation in year two. So after we do our value add and all those expenses to expand and build, then we'll do that full cost seg depreciation. Okay, cool. Any other questions? I do see one other question there from Ashish, but I'm not going to make them name his competitors. I'll drop my
unless you want to.
I'll drop my information there in the chat as well.
Okay.
Make it easier to people to connect that way as well.
All right. Any other questions? Feel free to take yourself off mute. We've got 6 more minutes left. Otherwise, we've had your contact information in there for quite some time.
Yeah, I apologize.
I probably missed it in the beginning, but how long have you been doing this, and how long were the founders? When did they found this investment?
Yeah, so Happy Camper Capital was officially founded, we'll say, in 2020. The first property that was purchased was in early 2021.
Okay.
So overall, we're still a very young company, a young group, with many years of experience behind us, although.
The other people that are in it, what types of properties did they work on before this?
I did mention at the beginning. So Adam Lindy, he's one of the founding partners. He had a very large single-family portfolio. He was a commercial broker for many years, a productivity coach with Keller Williams as well. He still does business coaching as well. Justin Hoggett, the other founding partner, still has a large multifamily portfolio, mostly all around the Denver area. He's had those for many years and done many syndications with multifamily as well. Also has his own property management company for those properties in Denver as well.
All right. Very cool. Hey, everybody, could you take yourselves off mute and thank Don for coming in and talking to us?
Thank you very much.
Thank you, Don.
Thank you, Don.
You're welcome.
Thank you.
Thank you, Don.
Thank you, Don.
Thank you, Don.
Thanks, Don.
Very informative.
Happy to be here.
All right.
Thank you so much.
All right. Thank you very much, everybody. And like I said, coming up next week, we have Cost Segregation by Isaac Weinberger. And again, please invite somebody to come to this group. We only spread via word of mouth, so feel free to send this meeting event on to other people when you get it. Have a great weekend, everyone.
Thank
All right,
you. Bye.
Thank you.
Thanks, Don. Thanks, Daniel.
Yep.
Nice week.
Thanks, Don.
My pleasure. Anytime.